All right, my friends, today we're going to be talking about BBIG or Vinco Ventures, what to expect in the near and longer term with this stock, how the short squeeze is looking, and just an overall general update for BBIG stock. So if this is something you guys enjoy, drop a like on the video. Also, if you want exclusive due diligence, all of my buy and sell alerts, whether it's for BBIG or any other stock, BBIG in particular, I've been doing very well on. The trade alerts are that first link in the description. So drop that like on the video, baby, and let's get right into it. So first things first, the sponsor of today's video is Moomoo.com. I'll briefly go over this. I know you guys don't always like to hear this stuff, but you get $1 in, if you deposit $1 in their platform, you get up to $7,000 in free stock. So by far the best brokerage promotion. Also, they're giving away this free share of AMC with a $100 deposit. It's throughout the rest of February. They've got it wrong right here, but this promotion right here, $1 to get up to $7,000 in free stock. Someone in my live stream chat said they got a free share of Apple out of it. You can totally get some good money out of it, and all you have to do is deposit $1. It's totally worth it, in my opinion. The first link in the description, second link after the trade alerts actually, and then first link in the pinned comment section if you guys wanted to check that out. Looking at the market cipher, market sniper right here, it's still looking pretty solid on the weekly candles, although we do have two red candles for the Heikin-Ashi charts, which does mean we are technically in a downtrend. Now, if we scroll up here, you guys can see the weekly chart, it's still oversold, meaning that there's still room to run until we're actually in a longer term uptrend on this stock. But the VWAP is about to cross over, so that's not a great sign. That would basically invalidate the last candle, right? If we get the VWAP crossover, it'll print a red dot. That is not super good, but there is still room for upside. It just means probably have to hodl a little bit. Now, moving into some lower time frames, like the 2-day chart. We got that green means go. We got the trigger wave right here. Now, again, this is not turning out too hot with today in yesterday's price action. Moving into the daily chart. Again, it looks very solid for an uptrend. There's major bullish divergence right here, but it got invalidated today with that red dot. Now you're getting the idea. It also got on this daily candle a blood diamond today. Now moving into the 12-hour chart, the 12-hour chart is also showing bearish divergence here, right here, boom, boom, big blue wave, smaller blue wave. That is a sell signal, right? And moving into the 8-hour chart right here, same thing, bearish divergence, you get the idea. 4-hour probably showed it the clearest. There's big blue wave, small blue wave, we're coming down, but the pain will probably subside within the next few days. Probably by the end of the day tomorrow is what it's looking like. Moving in to the 1-hour chart. Again, we got that green means go buy signal. Got invalidated by the red dot. We're coming down a little bit more. There's probably not too much bearish pressure left remaining on this stock. You can draw the diagonal trend line right here. The most it would probably go down to is like 275, which is not terrible. Also, the hourly chart looks like it's going to end up going into some red money flow shortly. So we did get a nice uptrend out of that. We were able to make some money on that, but not every time we can just continuously move up to the moon. And the sign should have been this red X that we got yesterday at market open. That should have been the sign that perhaps there's going to be less bullish pressure, right? And we can do some speculation on the 15-minute chart, right? We got the green dot. It could come up there, but I'm more concerned about those longer time frames. We're number 1 on the short squeeze leaderboard right now. BBIG, Vinco Ventures also still have that T threshold security, meaning that there's a bunch of failure to delivers going on in the stock. Or text data right here. It's getting pretty bad. There were some return shares today, so there was actually probably a few shorts that got squeezed out over here when we were uptrending on February 1st. So that's pretty good sign right there. It shows me that there's probably some retail shorts that are in this play. I have suspicions about the institutional shorts, that if they're going to cover or not. We've seen multiple massive moves in this stock without actual covering. So institutional shorts, I don't know, but retail shorts, and we have been picking up. As you guys can see, the last time it was reported as of January 14th, about 2 weeks ago, is 33.5 million. Now Ortex is estimating 38.5, almost 39 million shorts in there. So there probably are a decent amount of retail shorts, which I think is very, very great. Also, cost of borrow is about 350%. Still very, very good. Says the days to cover is 1.36. It's probably more like 0.5 to 1, just because there's recently been a lot of volume on BBIG. Moving in to the Fintel, again, number 199 short squeeze score. Barely any shares available to be borrowed. They also have the borrow rate being pretty high, over 100 right there. The short volume has actually gone down the past 2 days, which is very, very interesting. It's most likely due to the fact that it's hard to short the stock right now. It's 100% utilized. So that is a good sign right there. And yeah, all of these failure to delivers, we've went over this before, but again, it's still pretty insane, especially on January 14th right there. Over 1 million failure to delivers. Moving into the flow today is pretty bearish, and this aligns with what we're pretty much seeing, especially here in this 4-hour chart. We got that red X right now. The last time they got a 4-hour red X was over here. It did come down again right here. It did come down off of that red X, and this is definitely aligning with the flow. So the flow is pretty bearish right here. It's about 89% bearish. I got confused with yesterday's flow. So if we move in to yesterday, which is February 2nd, it was a confusing day. So let's slap the bid side on here real quick. There was a bunch of call options come in, and this was all before 3 p.m. yesterday. Yeah, about 2 p.m. yesterday, the call option activity ended. And then there was a bunch of selling. This looks like a market maker move because there was massive amounts of premium here, right? It was 108,000, 71,000. Looks like the alert got printed twice. I doubt it actually happened twice, but still pretty significant, right? There's only calls being traded here, so no puts are being traded by whales. In my opinion, the implied volatility is just way too high to make a decent return off of puts at this point. But then at 2:06, we saw a massive, massive influx of selling of call options and extreme premiums. 1.3 million right there, 272,000 right there, 137,000 right there. Selling puts are selling calls is technically a bearish strategy, right? Because you're slapping that bid brings down the price. Calls are a bullish strategy. You bring down the price of a call. It's a bearish strategy. These were also pretty much all sell to opens, right? So they wrote these contracts out of thin air. This can be interpreted as a short sell, right? Because a lot of these contracts are in the money. So this could be interpreted as either an institutional short sell through synthetic options because they have 100% utilization, or it can be interpreted as a liquidity move by a market maker. Perhaps the market maker is trying to add liquidity to the option change because there might be a move for 218. They're selling deep in the money calls with $1 strikes, 0.5 strikes. These are more than likely some short sells in very, very massive premiums. So this should have been a red flag. If you're looking at just the ask side, it looks bullish because not a single put was bought. And this is likely because it's not a good value for puts right now. Implied volatility is so high, and BBIG is already at $3.50 as of yesterday. So there's not too much downside risk, but I could totally see how selling a call could be a decent bearish strategy because you'll get that theta decay, and it's just also easier to profit. So that makes sense, and I definitely interpreted this incorrectly yesterday, and it's definitely adding up as a bearish move today. Anyways, we're also seeing some lower call option volume today. There could be a push into tomorrow's expiration. If we're looking at the option chain, it's actually pretty nice for February 4th, but the real big option chain is in April. So April's that really big option chain, 43,000 here, a bunch of out of the money options, another 40,000 right here at the 6th. So April is where it could really get juicy for BBIG. So if you want to be super risk averse, right, you don't mind waiting for the swings, you could totally just wait till April and you can probably make some decent money on this stock. Another interesting thing is that max pain for the February 18th expiration is $5 per share, which would be almost a 60% upside from current price levels. The 218 option chain we did not look at when we were just looking at this, but it's also pretty decent. Not as big as the April option chain, but it's still better than the March monthly expiration, so potentially we could get a move into there. Looking at the gamma exposure, it's all positive gamma, meaning that it's very unlikely that we have to worry about the price action being driven down by puts. We should probably be more sketched out by those massive selling of call options that we saw from that floor trader yesterday. I think that was probably the most significant options trade, and I completely interpreted it wrong. Anyways, guys, that's about it for the video. I hope you guys have enjoyed. The short-term outlook's definitely not looking as promising for BBIG, but you have to remember, this is short-term. We're building this up for April 14th. That is the next biggest option chain. Overall, with those massive amounts of call option sells, that should increase the gamma exposure of the stock, even though it does come off as a short sell and it does temporarily bring down that price. But if we do start moving back to the upside, there will be more pressure for them to close it, and you can still short squeeze someone who is short on the call option, right? Anyways, that's about it. Drop a like if you guys enjoyed. Subscribe if you guys are new. Check out Moomoo using that link below in the description or pinned comment section if you want up to $7,000 in free stock. Remember, someone got an Apple stock out of that, so it ain't no joke. Only $1 to get up to $7,000. It's worth it, so check that out. Also, if you want all of my buy and sell alerts, you can sign up using the link below for Hootmoney trade alerts. Anyways, that's about it. I'll be seeing you guys next time. Have a wonderful day.